All right, so I'm going to start out by looking at not that chart. I want to start out by looking at this right over here. We'll come back to that. And this is our market condition monitor. So I have this now. You can see that I have Google in there right there. And what I want to do is I want to look at really the trade setup condition and make sure that that really supports what I'm looking at, because you can see here I'm looking at short term. This MCM is set to trader style right there. So you can pick the style that you want to look at or the style that you are. So I'm looking at short term, near term, really the next, number of days. And if I go to the near term here, you can see also the conditions are bearish in here as it looks at these combined algorithms using our momentum conditions in those indicators. So near term is bearish, and the trade setup here for the short term is bearish. So I wanted to look at that first before I got to looking at the chart. So I'm going to switch over here. We'll come back to that SPY in just a little bit. And here is the Google chart. So let's just analyze the cyclical patterns as we see them in here. So what's happening is that the cyclical pattern is negative. Now, why do I say that? Well, Avi's work is on here, so I can tell you what he's shown in here, and that is the cycle of translations and configurations have been super bullish. When you have long rallies, it only leaves a little time for a decline. The same thing here. And then what happened on this one is that it only rallied up into the left side of this cycle and then came down in the minor cycle and broke that low right there. What that sets up is a failure. In other words, this minor cycle should rally, which it did, but then fail in the resistance zone, which you see it stalling. While the market's making all-time highs, you can see that Google has got a different story here. And of course, Google is under attack by the government, which wants to break it up. So that might be a factor in here. But what we see is momentum positive. But while the momentum is positive, it can only get up to that resistance area. When this cycle completes in this period right over here, I'm just going to grab this right here. It should essentially be that arrow right there for just the minor cycle will join up with the dominant cycle, as you see right there, into this period of risk, as we call it right there. So that's the reason why we have the projection to the downside, even though we have stronger momentum. And also we have conditions such that they're not as good on the shorter term. And that's why the MCM is giving us the readings that it is, the trade condition is bearish. So that's the daily. Now that's the weekly. Now let's look at the daily in here, and we can see here the momentum in here is still strong, and we're getting these readings right over here that this is positive on the short term. So when the sum of all of the evidence in Google is giving us a different reading, and it's telling us that be careful. And you can see in here the slim ribbon moving sideways and about to cross over. So the intraday information that we're getting from there is telling us that this is about to move to the downside. Here's your supports right over here. So we're going to project that Google's going to move down. And while the projection is down here to either this area here, 158, or this area here, about 152, I think it could test this low here at about 147. Now, if we look at the timing in here, this projects out to December, early part of December. This right over here is the end of October. So the next cycle right over here takes you out into mid to late December. That actually might really be telling us the story. And what might happen is that this cycle stays positive. You then get another rally in here, which would then be predicted. And then after that, it begins to decline out into December, something like that. So if this stays solid in here, then it could actually be out into the December cycle in here, where it again goes to the downside. We don't really know which one of those is going to be the one that has the bigger break, but I'm just going to duplicate that, and it's either that one or this one over here, which would then take you down into that December period. That's what we're looking for. It's just a matter of how this daily sets up. And when this rolls over and turns red, and this turns red, we'll really have a good sense that the conditions were such that it could decline in a significant way. So right now, if I were anticipating this based on what I'm seeing, I would be just taking my minimal short position in here because we don't quite have all of the indicators yet that it's ready to move sharply to the downside. But the cyclical patterns and our market condition monitor are warning us that that is about to happen. So I would say small short now, get ready to add to it when the conditions tell us such.